Hello, everybody. I'm your boss, Joe Boss, and welcome to another Plan the Profit Daily Plan. We got Bitcoin above 60K. Great, and we've hit a top here of, well, about the 21 bucks short of 64K. Also, it looks like I got my internet working fine. Don't know what happened over that last stream, but it took me part of yesterday to fix it, which is why there was no stream yesterday. But everything should be smooth sailing from here until we run into more problems. Who knows? Yeah. Anything can go wrong. Stuff breaks constantly. So we got Bitcoin above 60K. This is phenomenal. You can see we're at the tail side of our distribution for a given week. Crazy, crazy stuff. And even when you look at it on the month, this is right here at the tail end of the month, and you're here right at the edge. 86, and if you round it, 86.2% of highs are below. 86.2% of the time, the high for a given month comes in below this particular pot in the distribution. So this is quite high. Actually, if I go here, I can put the 90th percentile in this indicator. And there's our 90th percentile up there. So it's in this zone where shorts are like catching the inverse of a falling knife. I think I said something similar to that over here, but obviously this was way too early, right? This is way too early, and it just came in pretty suddenly. More expansion on the ETF side. I read some analysis from Weston Nakamura, and he was saying, hey, you know, there's some considerable risk on sentiment, especially when you look at the relationship kind of between Bitcoin and Japanese investors in the Nikkei. Interesting analysis from Weston. Really enjoy reading his commentaries. I'm subscribed to his Across the Spread newsletter. So we have on the macro side of things, Eurozone inflation, US PCE, and also Chinese PMIs. And the Chinese PMIs are actually going to move quite a lot of things. Let's kick this off with the DXY. Because DXY had a particularly choppy day, huh? We went all the way up here. We were following this expectation. I thought we were going to hit this thing, you know, for today. And then we retraced back below 104 here on the same day. And looking at this thing on the week, you know, we still have room in the rest of this week to continue moving higher. And we'll see if this thing keeps going. And in yesterday's stream, I would have been streaming right here at the close and saying, oh, wow, you know, we're following expectations. Seems like we're going to be going up here. Maybe tomorrow will be a green day. No, today's a red day. Today is a red day. So maybe our chances of seeing the high tomorrow, yeah, pretty much in the next 24-ish hours have kind of been stunted. It really is going to depend on how well those inflation metrics out of Europe and the US, you know, PCE, and those PMIs come out. Man, inflation, the preliminary inflation out of the Eurozone is expected to pop. So that could make the ECB more hawkish. I don't know if it's actually going to make them more hawkish than they already are. They may, you know, puff their chest and say, oh, inflation is rising. We have to be, you know, ready, willing, and able to do another rate hike or hold rates at the current spot for higher. PCE is expected to continue falling. It's quote unquote one of the better behaved inflation metrics in the US, but the one everyone pays attention to is, CPI. And when it comes down to why I'm paying attention to that China PMI's number, China does a lot of business in Europe, and they do a lot of business with Australia, and they do a lot of business with New Zealand, and they do a lot of business with all of Asia, which includes Japan. If we see PMIs continue to, if we see PMIs miss their expectation, they're expected to move fairly well, fairly positively. That'd be nice. Just so long those PMIs are moving in the right direction for China, it could add a little bit of fuel to the flame for risk on. It'd particularly help New Zealand, actually, because New Zealand's having a bit of a growth problem. They're keeping their rates high to manage their inflation. But you can see we had a quote-unquote hawkish RB&Z, and they held rates and they were hawkish, and they said, oh, we're not going to cut rates until 2025 potentially. And you can see we had a shot here, keep getting wicked out here, keep getting wicked out here. It's just the odds, Sucks when you see it, but that's kind of the game here. And never risking too much on these particular ideas and separating them out through time is kind of important. So net, the expectation for this week seems to be following the pattern. I don't think we're going to be getting these closes here. If I could just reload the indicators here. Maybe we get our close somewhere around here towards the end of the week if those Chinese PMIs come in all right and European inflation isn't crazy high, or if it comes in essentially flat. We'll see. Again, it's the services across the G7 that are holding them. Actually, for pretty much the entire world, services are that side of inflation that's still sticky, and when we get these preliminary numbers, we'll have another good estimate of how qualitatively sticky that inflation might be still on the services side of things. So how well did this expectation play out compared to what we actually got? Doing this sort of review, when you set your expectations for a week ahead, and then reviewing what actually was realized against your expectations, is a good habit to have. It keeps you on top of things. It says, oh, wow, I should have been more bearish. I should have been more bullish. And doing this little exercise helps a lot, personally, for myself, to make little adjustments to my own expectations. Like, oh, the market was a lot more bearish or a lot less bearish, or vice versa. And in this scenario, it was a lot more bearish. We didn't get this up move. We did get this down move, but the down move was a lot more than I expected. So net, I'd say this is sort of on point. Now it's more or less, does this bounce, this expected bounce from a low coming in actually around this point in time, go into the end of the week? Now, it's probably not going to be at this price at 61.7. It's probably going to be, in the lower half of the 61 handle by the looks of things. We can look at our seasonal data here, look at our closes, see how that looks. Yeah, I'd say in the lower half of the 61 handle. That makes sense to me. And by the way, tomorrow's stream is going to be a month ahead trade plan, because tomorrow is the last trading day of the month of February. So once a month, at the end of every month, I like to not just do my outlooks week to week, right? I do the week ahead outlooks every Friday. We'll do month ahead outlooks at the end of each month. So at the end of each week, at the end of each month, we set expectations and we see how well our expectations match up. And again, you got to be forward thinking. Oh, what are the major economic events occurring in March? What am I expecting to occur for XYZ asset during those major events for March? And doing this regime consistently, or even getting ahead of it before the last trading day of the month or the week, can, I feel, significantly make improvements to trading expectations. Remember, my definition of what makes someone a trader is someone who has exposure to a change in market expectations. Because when you trade, you're buying some low or you're selling some high, expecting the market to go low or expecting the market to go higher. You're trading an expected change in the future. So if your expectations are not met, whether they go under your expectation or they exceed your expectation, what matters is, or even if you're just flat out wrong on some of your expectations, that's okay. That's okay. This isn't the end of the world. Like having drawings that look like this, right? It's not the end of the world. It just means, oh, my expectations were wrong. I need to readjust because something changed in the market that didn't match my expectations. There's information that I did not have. And you know what? There are things outside of your control, or things that are outside of the realm of information that you're looking at, knowledge-wise, that you learn to take into account when you do this exercise of setting expectations, doing research, looking at outlooks for the week ahead. And then you have, you have some indicators. I prefer statistical indicators over technical ones. So I like to use distributions. So I was like, okay, I'll set a nominal expectation based off what's most likely to happen based off the statistics that I'm using and the methods that I'm using. Now, again, this is TradingView. They're not going to be absolutely, perfect. There's some data that just TradingView doesn't provide that would make these more accurate, or, some calculation functions, there's limitations to the amount of calculations you can do. So you have to be really smart when you program these things so that they work in TradingView optimally fast and they give consistent, reliable numbers. And I'm always working on upgrades and updates. I'm working on stuff right now to continue upgrading these things. It's pretty much all I've been working on for like the last, 2-3 weeks. Pretty damn consistently. Very, very happy with the progress I've been making. And eventually there'll be, new indicators, and the people who are already subscribed will get access to that. I like having just one price subscriptions where just everyone gets access to everything instead of doing things piecemeal, right? Because then that way it's just, okay, instead of me trying to, pass on one indicator for this much and another indicator for that much, it's just like one fee to rule them all, right? And then there's a bunch of extra goodies like the trading groups and one-on-ones and group events and whatnot. And every Saturday, there's actually a group event for Outlook review. So when I talk about doing these expectations, one of the things that's helped me the most is reading outlooks for the week ahead or for the month ahead from institutions with professionals who have more significant insight. They live and breathe this stuff with much more advanced data, and they have swarms of people collecting all sorts of extra analytics, talking to people sometimes directly involved with the things occurring around specific economic events or geopolitical risks to gain insight. And it's important, I think, to read their insights and then read a wide variety of those expectations from those institutions to get a holistic view of what the market expectation is. And then from there, we can say, okay, well, this group's looking at these assets, that group's looking at those assets. You take all that stuff into consideration when you're making your own decisions. You don't take what they take as financial advice, or, me for that matter, because none of this stuff is ever directly applicable to any individual's, portfolio or investment choices. I'm doing this for demonstration and educational purposes, right? I got my tools. I'm showing how I'm setting my expectations. I'm going through like, hey, reading outlooks can be a pretty smart idea, that can be quite helpful. And so one of the things I like to do is every Saturday have that time just in a group, because, other people might find things useful for me that I might not have even given any attention to before. So having that once a week, outlooks review meetup, man, that helps. That helps a lot in time, and then doing another review of the charts with all that in mind. So let's go down the gamut here. Again, Eurozone inflation. Yeah, we got a short from up here. Slightly better timing than a lot of guys who were getting short around here, because we have our high up here. So we nailed this expectation like dead on, which is great, right? Really excited about that one. But again, yesterday, if I streamed yesterday, I would have said, oh man, we are right in line with expectations. I'm expecting another red day tomorrow, which would have been today. And today we just reversed most of this price. I'm not too sure if we're going to hit the spot now, right? We may just end up going to more or less closing around these prices, maybe see a little bit more negative drift. Or maybe when we get those preliminary inflation numbers, it makes the market a lot more hawkish. If those preliminary Eurozone inflation numbers surprise to the upside. Because if that's the case, it is going to make the ECB more hawkish and definitively start hiking after the FOMC. More analysts are talking about, hey, it doesn't seem like the ECB is going to be cutting rates before the FOMC cuts rates. I was actually listening to, I believe, Andreessen from Standard Research. Man, I'm pretty sure he said the same thing in one of his recent episodes, watching his podcast. So, man, I've been watching him since he was doing that macro show with the guy from the Macro Compass. Yeah, man. Actually, I was familiar with him when he was still at Nordea writing it was like the best thing to read at Nordea for so long. I think I still have streams reading his outlooks, saying he has some of the most funny outlooks. Like Nordea has sometimes the most wacky and pithy and witty headlines and one-liners in their outlooks. And yeah, Andreas wrote pretty much most of them. And then Oh, I won't get into it here, but uh, that turned out to be his downfall. Why he was let go at Nordea, ended up making his own research firm, and he's still on very good terms with those guys. But man, my crosshair is freaking out here. What's going on? It's like jumping all over. You guys see this? I'm not moving my mouse. It's just what's going on? No matter where I put my mouse, it seems to be just going to this one spot here. I don't know what that's all about. Did it stop? Nope, it didn't stop. Okay, I don't know what's going on there with trading, but that's definitely a bug. All right, well, we're now officially in the next trading day. We'll see how the rest of the day plays out as we get through it. We do have some Japanese data coming in down the pipe here in about 2 hours, roughly, a little under 2 hours. Retail sales, probably going to be the most important. You can see in that industrial production. We will see. And in that case, let's go ahead and check out the dollar yen. Dollar yen is holding up. Looks like we hit this expectation of going lower. I didn't set any other expectation of how the rest of the week's going to go, but it looks like we hit this expectation. We were off by a single bar. So I'd say within a margin of error, yeah, that was a pretty good expectation. And that was from 5 days ago now, so, good expectation there. All right. Oh, you know what was interesting? The Aussie-New Zealand cross. Yeah, we didn't go as far down as we wanted in our expectation, but we sure did move high up, and we went a lot higher sooner than we expected by about 2 bars. And we were only off. Yeah, we were only off by about 11 pips from our expectation of where the high was going to be for this week. All right, it doesn't seem like we'll end up getting this close. That expectation might be wrong, or we get a bit more positive drift. It's really going to depend on if those Chinese PMIs turn out okay, which end of this cross is going to be impacted more. Also, commodities seem to be doing a bit of recovery. Yeah, crude seems to be doing all right. We hit the low expectation. We did get up, and we definitely exceeded the high expectation here. Now it's a matter of, do we get this sort of drift lower here? And if that seems to be the case, I'd still be bullish into, I'd still be bullish into oil over the next week. Again, it's okay to have missed expectations. It's okay, right? This was a pretty nutty week here. We're like, no, down, and then up. No, up, and then down. But the one expectation that was consistent over these 2 different time horizons was, hey, closing around here, and we nailed that. Yeah. And it's okay to not have absolutely pinpoint perfect expectations. What's important is that you set expectations, and then over time, you learn what information you need to make more accurate expectations week after week, month after month. And that's how you actually get good at, in my opinion, being a trader. What I think defines a trader. Someone who can figure out what the change will kind of preempt and study what the change in future expectations is going to be and get exposure and position in favor of that. And sometimes it's, not going to be statistics that helps you get those expectations. Maybe it's not even market research, reading those outlooks. Sometimes it's just stuff you read on the news and, stuff that you just see around social media, right? That helps a lot with, particularly with equities. Getting research on individual equities can yeah, that can be a doozy because the expectations and opinions of individual equities vary a lot more significantly. You have a lot more variation in the expectations for like mid cap companies. A lot. Even large cap, even for stuff like Apple and Nvidia, you do get a lot more variation in the expectations, which is, you know, why I actually kind of prefer FX. You do have a more consistent interpretation, and when you do find stuff that deviates from the norm, it's pretty easy to figure out what assumptions they're making to come to those expectations. Whereas you read some equity research and they just say, "Oh, this is our price target. Here are some major risks that could make our price target go wrong." They don't always delve deep and kind of reveal why they're setting those expectations exactly. But every once in a while, you go on to Twitter, you find some blog posts of someone who does like a deep dive. It's like 20 pages. And you can learn a lot of, you know, thinking about expectations and what type of research methods and regimes it takes to do good equities analysis, for example. USD CAD actually did really beat our expectations here. I was expecting more down. Again, this is risk on in this direction, but nope. Dude, the Canadian just tapped that high. Man, I should have looked at I should have set an alert on this and taken shot. I think I did get an alert on this and taken shorts around here. I'd have been up for that. We can probably set a new expectation just for a slight negative drift into the end of the week. So let's pop in our timestamp. Now let's check out one more indicator here. Let's check out our closes. Yeah, either down here or more sideways. Let's overlay these things. Yeah, maybe sideways, maybe a bit. Essentially sideways, maybe a bit down. Some risk of going like that, in my view. I'll go ahead and do this because I think this is the nominal expectation at this point. Canada is expected to get a bit of a boost from commodity prices rising. Commodity prices are so expensive. McDonald's is kind of getting a lot of negative flack in the media right now because of the price of their hamburgers. Oh man, the price of McDonald's is just through the roof. There's no more dollar menu, guys. No more dollar menu in McDonald's. But that hasn't been a thing for a while now, has it? All right, let's go ahead and check out the ES. Yeah, not hitting our expectation here. It did move lower a bit later in time. Did start moving. But it's not hitting. Yeah, I'd say potentially a bit lower here and then into a close. So I don't know, maybe something along these lines here into the end of the week on the ES. We can also pull this up. Yeah, it's closing odds are pretty spread out and pretty flat. Check out all of those. Yeah, a lot of lows down here. Yeah, maybe it's worth setting the expectation a bit lower even. Yeah, something along those lines. That seems pretty nominal to me based off this information. So we'll go with that. Let's see how that plays out. We got gold as well. We can check out gold and then we'll do NQ. Yeah, gold did not pop up as much as I was expecting. No. No, 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 it did not. It more or less followed this expectation here. Yeah, was not as bullish as I had hoped going into this week from the expectation from 5 days ago. So let's take another peek here. Wow, it does seem like the low could be in here. So let's look at our closing odds. Well, I'd still say you're in the middle of crossroads here on gold. I mean, on the bullish side, most of the closes are up here above 2050. And on the bearish sides, most of your closes are in this 10-point range around the 2030 handle. So it really depends. And I don't know enough about gold in the short term to set this expectation, except if Ruscon comes in, dollar weakens, I would still expect this closing expectation to be met. And then we can check out NQ. Yeah, NQ, a lot less volatility than we were expecting. We're expecting a move up quite a bit lower. That may still be coming in, though. Yeah. Eesh. That's a lot of lows around here. Yeah, I don't know. I have quite a bit of uncertainty. Specifically because essentially this is saying, hey, this is going to give you a volatile snap down here to call it the low 17,600s. And then from there, bounce into the mid low 17,700s. And I'm not so sure if we're going to get that or not. To be frank, I'm just not so sure. So I'm going to leave these expectations untouched and just say, yeah, these expectations were not met. And for anyone who didn't see it at the beginning of the stream, Bitcoin's above 60K now. It has dramatically exceeded the expectations that we set. In fact, it's on the week past the 90th percentile here. It is in very, very thin spots here on the distribution. This is like the inverse of a falling knife. This is like catching a cloud. Instead of trying to catch a falling knife, you're trying to catch clouds here. You just can't grab onto anything, and the clouds just keep going higher and higher and higher. And no matter how much you try and grab onto the cloud, there's always more cloud above you. Yeah, there's this weird snapping bug with, yeah, you see that? See how like the crosshair keeps jiggling around? It's kind of annoying. Maybe I got to restart my TradingView desktop app. And then Ethereum. Ethereum followed expectations a lot more consistently. This is the last expectation we set up at the most recent date. And you can see expectations change over time, right? Over here, if I use the replay, like, oh, maybe down, up, and then we close lower. And then 3 days later, price changes, new information comes into the market, expectations change. It's okay to set new expectations when new information comes into the market, because then you get to catch stuff like this. It's okay to be wrong and then change your mind once you reason about it and actually understand why you're changing your mind. The whole point of setting expectations is to see how well your expectations line up with the market's expectations. You know, not the other way around of trying to fit your expectations onto the market and then getting mad that the market didn't follow your expectations. I gotta say, I think that's pretty much everything I wanted to chat about today. Again, I'll say that tomorrow I'm going to have the month ahead trade plans. So that'll be the title of the next stream for tomorrow for March's trade plans. So I'm not totally prepared right now to actually set those expectations outside of just the statistical expectations that I have and some preliminary thoughts that I have about FOMC and ECB and the next round of inflation metrics coming out. But now is the time to start thinking about those things. Now is the time to start thinking about those things of how is the month of March going to print? Is it going to print green? Is it going to print red? And then go from there on. Well, if I think it's going to print green, maybe I want to set an expectation where my high is pretty high and my low is conservatively low. Start thinking about those things right around this point. And, you know, I've actually received quite a few month ahead expectations already in outlooks. And I'll be going through the ones that have been sent to me. And with that all said, I'll go ahead and say thank you all for watching through the stream. The streams are getting more viewers more consistently as I start streaming more consistently. So thanks for everyone who's liking all the videos and showing up and asking stuff in the Discord and participating in those Saturday events if you're in the trading group. So, yeah, not a problem. The thing's recorded, Wessex, so don't worry, you can just watch the beginning of the stream if you want on the replay. So yeah, thank you for watching, and also thanks for Prinsley showing up at the beginning saying, hey, appreciate it. Alrighty, I'll go ahead and see you guys in a bit.